Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, November 4th, 2010. Well, folks, the markets are soaring today. Massive gains across the board as the dollar gets pounded again. And again, the realization in the media is finally coming here to attention, something that we have talked about and given to our subscribers months ago, talking about how the Fed is trying to inflate asset prices. Finally, today, I heard the media discussing it, and again, it's finally showing up in the overall global setting of the markets, which again is telling you that the amateurs are now privy to that information. And again, what do I mean by asset price manipulation and inflation? Well, essentially what the Fed is doing is pumping massive amounts of money into the system, obviously by QE2, QE1, and their POMO effects, which is permanent open market operations. This essentially, when you have massive money going into the market, asset prices have to adjust to the upside. Remember, if the dollar drops 10%, to keep pace with a real market value in the global setting, a stock price should be going up 10%. If it doesn't go 10% higher, then it technically lost value. So again, as the dollar collapses and as they pump more money into the system, which puts more pressure on the dollar and makes it go lower, asset prices must go the opposite direction just to keep that real value. And again, today the dollar's getting crushed. And again, we'll talk about the dollar here. I'll show the dollar intraday chart. Take a look at the dollar today, folks. Trading below 22. Now, why is below 22 significant? Because if you go to the daily chart on the dollar, that is now, and you can see it right here on the daily, that is now below the November 2009 lows. Now, do we close below 22 or do they regain that level by the close is going to be something I'm going to watch very carefully, because you have to realize that there's not a lot of support on the dollar below this 22 level on the UUP. If you confirm this move below, and this is using the in the money stocks confirmation signal, you will be looking at a possibility of a pretty sizable down move further in the dollar, which again in theory would push the markets up unless you create a panic in the environment of the markets on basis of a collapsing dollar. I don't think that's going to happen, but it's always something we need to keep in the back of our minds. All right, so again, watch where the UUP closes today. Does it close below 22, above 22? If it closes below, you have to look for confirmation. And again, for those of you that don't know what confirmation is, you have to join the research center. We discuss it every night in the nightly videos, which again are 30 to 40 minutes in length. And that's just one part of about 5 or 6 different things included in the research center. Going back to the SPY, let's talk a little bit more about it. That's the daily chart. I'm going to touch on it shortly. The gap up today takes you above 121. I had told the chat room and the research center that 121 would be resistance, and then if you got through 121, 122 was a double top from April 2010. Sure enough, we gapped above, which those of you that are part of the research center know is a river theory. And again, that's another proprietary technique we taught many of our subscribers here at In the Money Stocks. River theory dictates there's a good percentage chance you're going to move to the next level. Sure enough, what was the next level today? It was right up here at 122. The market high today is 121.96, right underneath 122, and since then the market has pulled back off of that level. 122, that was your shorting opportunity, as I talked about it in the chat room. Anywhere really between 121.90 and 122.10 was your level to kind of take a little bit of a short, and it worked out beautifully on the downside. All right, and again, markets are floating higher here. They're going to stay higher, in my opinion. If you get through 122, 124 will be your next big target on the SPY. And again, as long as the Fed is really in control here, continuing to flood the market with money, there's a decent chance that if the dollar goes lower, the markets will continue higher. All right, granted, you have a double top here on the daily chart. Let me show you the daily chart. If we go to the daily chart and I zoom out just a little bit, this pivot high from April 26, 2010, we did hit it today. And again, that's why you're stalling at the highs of the day here or just below the highs based on that perfect double top. All right, NASDAQ already took out that double top. Dow already took out. The S&P was kind of the last one here, and that is in play. You can see the DIA, folks. This is the DIA. Here was the previous double top on the DIA right here, which is the Dow. And I can put a trend line right there. You can see you gapped above it today and took that out. And again, if we look at the Qs are even up more. Here's the previous double top on the Qs. Look at that move up. So again, you can see that master move up on the Qs. NASDAQ, by the way, and the Qs, the NASDAQ 100 is now up 25%, folks, from the lows just 2+ months ago. Right here, from this low, that's a 25% move higher. Unbelievable stuff. But nonetheless, just understand what is going on. Whether or not you're long or short in this market, as long as you're short and you're careful, that's fine at these levels. As again, the market's extremely overbought. If you're long, enjoy it, but be aware what is going on and how the party eventually will end. Every bubble that's burst has been fixed by the Fed doing things that has created another bubble that's been bigger. Tech bubble burst in 2000, basically. The market collapsed down. We know the NASDAQ was at 5,000, came all the way down to about 1,200. What did the Fed do? It ended up lowering interest rates to basically zero and increasing the printing or pushing of money into the system. Helps people buy houses. The housing bubble was created. The financial bubble was created. That collapsed. Now the Fed is again taking even more drastic measures by interest rates being at zero or negative in some cases, and again going into certain avenues by pumping money into the system to really liquefy things and get things moving again. It ultimately will create another bubble, but not for a few years. I mean, you have a certain amount of years between it. Think about 2000, then you have a bubble that does not create until 2007, and again, each bubble will have a shorter span, which it'll get bigger and bigger and burst faster, but you're still talking about the last bubble was basically a 7-year, 8-year bubble that has collapsed over the last couple of years. The next bubble you probably figure is a 3 to 5 year bubble that will increase and again eventually collapse. So I mean, in all fairness, there's going to be a lot of volatility in the coming years, but the big bubble I don't think will be in play for a couple years down the road at least, and you could have a lot of choppy, even some upside markets before that does end up happening. Okay, so we'll continue to watch that, but that's the cues. Let's go back to the SPY. I want to go back to the intraday. Just continue to follow your intraday levels. Right now, the base is just above 121 right here, or the approximate 121 level. Your high pivot is 122. You're hovering just above the 20 moving average. I do not expect this market to break down. The market is dead now, folks, and it should be dead the rest of the day. Why? Because you're waiting on the jobs number tomorrow. Non-farm payrolls, unemployment report will come out tomorrow. That will be a huge event for this market, although nothing in comparison to what the Fed announcement from yesterday. But again, I do expect a little bit of a gain in jobs tomorrow, and again, the market is overall pricing that in. Even if it comes in, it would have to come in pretty badly, maybe down 100,000 overall or more for the market to really get skittish on it. Either way, I think the market says to itself is, regardless of what's going on, even if it's negative news, then the Fed will just pump in more money. If it's positive news, then again, that's great for everyone. So there's not a lot of negativity out there that can come in, at least at this point. We're going to need some sort of shock to the system. I'm thinking something like in Europe or some other country that has to come out that would really shock the overall dollar into a rally, and then that could put a point in where the markets pull back a solid amount. Otherwise, you're just looking for small pullbacks at this point. You don't necessarily want to get too hyped up about it until a next pivot day comes or cycle day comes, and then we'll be looking at things a little bit more closely based on cycles, okay? So that's where you stand right now. Again, a market that's trading basically sizably to the upside. Dow right now is up 192 points. NASDAQ is up 30 points. And the S&P 500 is up about 18. So again, 1.5% gains approximately across the board. Again, NASDAQ in 2+ months is up 25%. Really, I can't remember a period where the NASDAQ, I mean, it's been a long time, folks, where the NASDAQ or any index has gone up that dramatically in such a short amount of time. All right. Now, again, what stocks are doing, what are stocks doing today? Apple Computer, I think, is worth noting because Apple hit a beautiful double top. Take a look at this double top pierce. I gave the short signal on a pierce of basically 120 area right up here. Sure enough, since then, it's pulled back to about 118. These are little intraday type trades that are good for some good scalping money. But nonetheless, either way, double top here should be good resistance on the daily as well. But again, it's all about the Fed. The Fed, again, is making the average American believe that there's a recovery by inflating asset prices. Remember, the Fed is, and this is exactly what's in the mindset of the Fed. It's Bernanke's thesis, actually. Bernanke's thesis is make the people of the U.S. or the global population think there's a recovery. Therefore, if they think there's a recovery, they'll spend creating a real recovery. That's the thought process. Do I think it's going to work? No. I mean, ultimately, I don't think it's going to work. But in the short run, it will work because of the amount of money flooding into the economy. All right, so again, just to remember this. As they inflate asset prices, people's 401ks, people's IRAs, people's investment accounts, people see the market going up. They feel like they're richer, even though in real terms, because of the dollar's decline, they are not richer. But either way, the average American doesn't realize the dollar has that impact as they just go every week to the grocery store. If something's a penny more here or 2 pennies more there, it's not really affecting them, or they're not thinking about it. They do what they have to do. They see their 401k going up. They go out and start spending money. They buy that new TV. They buy that new couch. They buy that new house. Ideally, that's what the Fed really wants, the housing recovery to happen. It's not going to happen because there's way too much inventory out there right now. Maybe in years from now, but not right now. But either way, that's what the Fed is hoping for, because that's the biggest creator of wealth out there, is if people's houses go up in value. All right, just want you guys to be the bare bones understanding of what is really going on. Again, right now you want to join the research center. Again, swing trades will be continuing to be pumped out here. Day trades in the intraday stock chat, a watch list posted, videos every night, daily market reports with key levels on gold, oil, and dollar. All this included in the research center. And again, if you're somewhat of a person that wants to be intraday and understand the intraday movement of the market, even if you have an hour a day, you want to be joining the chat room at inthemoneystocks.com. Again, one more time, that's inthemoneystocks.com. Join us. We'll see you soon. Let's make some more money. Take care.